The moment you've all been waiting for. Bitcoin, 100K, and then some. Man, so many Bitcoin stocks to talk about. Robinhood getting benefit from this. A lot of earnings, some big movers in retail off earnings. We have to discuss that. Jim Tassoni, 8:35 a.m. Armor Wealth Strategies. We'll see what he's up to. And should I tease? 9 o'clock guest? Dennis, special guest here on Pre-Market Prep. Let's fire up, folks.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. We are fired up on this Thursday. We got a big slate. We're going to run down the commodities and futures and then get right to the show. The stocks that you want to talk about, down $2 is the S&P futures at 60.9650, setting that new all-time high yesterday. You have the buck in the red, not by much, 8 cents, 106.21. TLT leaking off the quad top at 94, flat at 94.05. USO flat 71.80, working on a double top as well. Gold and silver ETFs, they're not doing much, but here you go. It's not at 100,000. It's not at 101,000. It's at 104,000 right on the kisser. That's up $4,085. That's 4%. That's easy math here. So I am going to bring in Mr. Fromhertz. He's ready to go. And Mr. Dennis Dick. Where are your hats? Where are your
I know. We need the hats. I didn't order it. I didn't think it was going to happen. I was convinced this wasn't going to happen, so I didn't order the hat. Just kidding. But I did not order the hat. Christian, why don't you have your 100,000 Bitcoin hat on?
I don't know. I was going to say the same thing. I feel like I'm missing something. I definitely feel like I'm missing the 100,000. You know, what's funny is it kind of just hung around this like 97,000, 98,000 level. And, you know, it got very close towards the end of yesterday. And it kind of was just setting up like, you know, like a lob, you know, in terms of like, you know, here comes the overnight move, because it stopped very close in the regular trading hours yesterday.
You know, Christian, that's such a Christian chart. I mean, I'm surprised that you would just, because this is what Christian does. He like sees something near all-time high, consolidates, and he's like, I like it. I like it. And I look at a chart like that, and I'm like, oh, man, look at all that resistance. But anyways, the futures did trade over 100,000 a couple different times. But, boy, we got a ton of stocks moving with it. I guess. Which one do you want to start with? Because there's a lot of stocks benefiting.
I mean, we got to start with Bitcoin, and we got to start with the biggest Bitcoin stock of them all. Michael Saylor's levered play is working here once again. MSTR benefiting from obviously Bitcoin 100,000 last night. It's up 8.8%, and we know it's levered. It's up another 36 points, and the bubble's reinflating, Christian. The MSTR bubble is back.
Yeah, absolutely. I mean, and this thing also took, we were just talking about this, that it kind of took a little bit of a pause. It's a leverage play. And, you know, it almost felt like a bit of a blow off top there for a bit. But, you know, and we kind of saw that over the last week or so. It was kind of making a bit of a series of lower highs. But, you know, it doesn't necessarily mean that the move is done. And it did just come back into the 20-day moving average and just kind of settled in a little bit. And that's not bad. I mean, so it's one of those things where the volume on that day, I think it was the 21st of November, you know, that was huge volume. But, you know, again, it doesn't necessarily mean it's done. You know, it's something that you really, that's where I kind of pay attention to some short-term moving averages and make sure that they're kind of, hey, just to pull back to the 20-day moving average is what we've seen in a lot of stocks. And, you know, with a bull market on our hands, it doesn't necessarily mean that was a blow off top.
Got breaking news here. American Airlines raising Q4 EPS guidance. Stock flying here this morning, pun fully intended, up 4.2% here. It's a big pop for AAL, and the airlines are back. They've been quietly, we know American Airlines been one of the laggards of the group. Like Delta has been flying. UAL is just unbelievable, from $40 back in September to $99 now. Forget the COVID lows. our COVID highs. We're past all that now. UAL is making new all-time highs. But American Air, AAL, has been the laggard of the group. Them and LUV. They've really been the laggards here, obviously significantly off their highs set back 2021, or even American Airlines was 2018. Thoughts here? Is this rally in the American Airlines and in the airline stocks overall? Is this for real, or is this just another trap? Because I've been in this American Airlines multiple times here, and it seems like every time it rallies for a couple months there, eventually they pull the rug.
It's for. I was going to say, go ahead, Joel. Go ahead.
I was going to say, you've been holding on for it this long. You've taken this much pain. Why don't you just buy more?
I'm out of American Airlines, but I've been in and out of it. I sold it a while ago. Yeah, I lost. I took the loss. I was in at 15. I think I cut the loss at like 13 or 14. I just move on. It was painful. You know what that problem is, too? It's the opportunity cost. Like when you're in these dogs, it's not just the fact that the stock is underperforming. It's the fact that all the other stocks are outperforming. So, but it's coming back. It's been on the comeback trail. We've been straight up for 3-4 months, up 50% the last couple of months. People are flying. People are doing stuff. So that's never went away. It just seems like even though the PEs on these things are low, it just seems like they just cannot sustain, long-term bids. But I mean, UAL is a completely different story. Like that move is significant. Like, and we haven't covered that much. Like $40 to $100. I mean, that's an incredible move for an airline because, it went down very quickly, obviously, in 2020 with COVID. It had 4 or 5 years of consolidation. And then just for whatever reason, in September, they decided they were buying it right back up to all-time highs. This has been an incredible run for UAL.
And for Delta, too. DAL is another one, too. And I actually like that. Speaking of consolidation, look at that top right chart that Joel's got over there. That doesn't look bad in terms of just consolidation in an uptrend.
We'll just go with the main stock that you mentioned here, and that was American Airlines. And I bottom right chart, 16 is a big number. You're up at 1592. It's up a stick. The way things have been going, I mean, on these gap and goes, I mean, you can stand in the way if you want, but if this gets a sustained $16 bid, as we just pop over $16, I mean, all these other stocks hit all-time highs. Travel stocks, CCL, well, it's going to take a while for that because of the dilution, but people are traveling. And American Airlines with the catch-up trade, we know that we have, who's our buddy in Love? Is that Elliott or?
Yeah, Elliott.
Yeah, he's an Elliott. So, I mean, it's finally moving. It's finally breaking out of its slumber here. So I'll be watching $16.
This is the broadening out that we've been talking about, though, where you've had this market, which was tech central focused here. And obviously it's broadened out into other tech stocks, but we've broadened out and there's certain industries not participating, but certain industries very much participating here. And the comeback in a couple of these airlines, at least, was for real. Like, you don't know why Love lagging so much, AAL lagging so much. Obviously, it's best of breed trades, I guess now. They got UAL as best of breed. But, what about the cruise lines? I mean, they've come back. RCL keeps making new highs every single day. $250 now from $100 a year ago. CCL's come back nicely from the lows, around $10, where it seemed like it was $10 forever. Back up here at 27. Norwegian, NCLH showing some life. It was $10 a couple of years ago, back to 27. Not nearly back to where it was at 60. And then the IPO, VIK, which is slow and steady, wins the race, just slowly coming back up here as well. So, I mean, these stocks, when you start seeing, it's not just the airlines, it's travel stocks.
And it's also, I'll take it a step further. Take a look at your Expedia, EXPE.
Oh, I wanted that one. I wanted that one because just a takeout rumor, and it never really checked back on that. Remember who was?
Oh, that's right. That was a M&A. Who was it?
Uber.
Oh, that's right. And then you got Booking, which is quietly at all-time highs. That's a name that needs a stock split, by the way. If there's a name that needs a stock split, $5,000. Yeah. You know what? You wonder when that's coming, and that could be the next catalyst here too. And you want to talk about consolidation at all-time highs? Look at the consolidation here in Booking. I mean, really, it's a $5,000 stock. But I mean, you got 1, 2, 3, 4, 5, 6. It's bunching up. I mean, when these stocks consolidate at all-time highs, we've talked, Christian was talking about this a couple days ago. When they start consolidating at all-time highs,
Usually they resolve to the upside more often than not. Now, nothing works 100% of the time, but if it works 60% of the time, you can make some money with that. Here you are, booking, consolidation right at the highs.
Hey, Christian, can you pronounce the CEO of Uber's name?
Of Uber?
Yeah.
Oh boy, I'm not. I think you're getting me on the pronunciation because I'm not good. Oh my god, I'll give it a shot. But yeah, you're gonna laugh because my pronunciation is horrible. Dara Khosrowshahi.
I wonder, is the K silent? I wonder on that one. Oshirashi? Anyways, bad tangent there, but should we pivot to earnings here? We got a lot of earnings to cover. Should we go start with some good or start with some bad?
Oh, we're bull mode here, so start with the good, Joel. Forget the bad. We don't talk about the badness. Talk about all the goodness.
Okay.
I mean, 5 below. I mean, I've got this one wrong because I keep thinking, this is, a tariffs. I do think eventually there's going to be a rug pull here, but right now, bulls have taken back command of 5 below. Obviously, the stock, is still significantly off where it was even earlier this year when it was $200 a share. But it's on the comeback trail. And again, the broadening out. People are looking around and saying, what hasn't gone yet? Where is their value? Where is their opportunity here? I don't feel like chasing maybe the NVIDIAs and stuff here at this point in time. Where is their value? I mean, 5 below has some value there. I'm worried about the tariffs, but the market doesn't appear to be.
Okay, we got a big old beat on a Q3 adjusted basis, 42 versus 17. We got a sales beat, 844 million versus 799 million. We're talking guidance. Well, they kind of drove a truck down the middle of the guidance, 323 versus 341, 333 estimate. Kind of a little bit up on the revenue guidance. Tough chart. I'll throw my 2 cents out there. Double top at 125, and then you get into that gap area. You haven't reached it yet. If 125 filling the gap's not to fill the gap, you would need to get to 132.44. I mean, it's 5 below. You could go anywhere. Christian, what's your technical take on this one?
Yeah, if it does fill that gap, I see some resistance at 140. But I thought what was interesting too is Dollar Tree reported the other day and gave us a little bit of a hint in the space that maybe the bad news is kind of priced in. Now,
yeah.
I don't think Dollar Tree is like a great company or like a leader, but just because the initial pop got sold. But it's one of those situations where, okay, if Dollar Tree actually is doing okay, I think a better company is 5 below in the space. So there you go. So yeah, I think one of those situations where we're starting to see a lot of these companies come off the lows, and this is another example of one.
I'm trying to find some other positive ones here, but most of the other stocks are down from last night. American Eagle, not great. My AVAV, not great. PVH, not great. Charge points up, but I don't know if anybody cares about that one. Sentinel One, not great. I was like, we want to start with the good. That was the only good one from last night. Where do you want to go? We got to go to the bad, I guess.
We'll stick with the retail.
Yeah, with the retail, yes, and that's great to go to AEO next. But I just wanted to point out that there's one name that I'm watching after the close today, which again is kind of tough, but it's Restoration Hardware.
Yeah.
So I think that this is going to be an interesting name on retail as well. Restoration Hardware, and the short interest is about 12.5%. So if they say something positive, we saw a couple of weeks ago, Williams Sonoma, which is again different company. This is more in bathware and furniture and so forth. But just wanted to bring that up after the close. Go ahead, Joel. Continue.
Well, we want to go to AEO, and what did we do here? I am seeing adjusted Q3 at 48 cents. The revenues were down. That's not what they're liking. Comps up Q4 only to be 1%, with total revenue down. I mean, it's been a buy the dip market. This is a stock that's been in a little bit of an uptrend lately. I think if people got jammed short in this thing, this is a pretty nice move on the downside. You're way off the pre-market low. The pre-market low comes in at 17.02. That's 74 cents away. On the dailies, there's a daily low. I don't know. It just seems like, if you got jammed short in this thing, you have into the report, boom, you're getting the $2.80 clip. I don't know if I want to go long it. I don't know if I'd be looking at it for a long. But I mean, if you took this thing short, have some puts, I mean, this is a pretty big move on 306,000 shares.
It's a
All right.
separation that we're seeing. You know, you got some retail really doing well and other retail not doing so well. AEO was one of those doing well up till the beginning of 2024, and then it started to leak here. I mean, I don't know. It's a difficult trade to like figure out these consumer trends. And, you know, obviously like an on is fairly easy, you know, to figure out the consumer trends. But some of these, you know, legacy, you know, teeny bopper retail stores here, I mean, what's the difference? You got Abercrombie and Fitch and AEO. Those two stocks, those two companies, when I go into those stores, I can't tell the difference. And maybe there is, but, you know, and obviously I don't shop that much. But, you know, when I've been in there, they don't seem that much difference to them. But you got Abercrombie, you know, up from $20, you know, a year and a half ago to 160, and then you got AEO in the same time period. It's up, I guess, too. But, you know, it's at 17 now, and a year and a half ago it was about, you know, 10 or 12. I mean, there's just separation here. We know the department stores, the big ones, haven't been doing well, because they've got the bigger expenses, but some of the smaller stores have been doing okay. It's hard to figure out which ones.
Yeah, exactly. And I mean, you know, Mitch is typing in the chat too. You know, Urban is a good example.
Yeah.
Of that. You really have to be in tune with the retail trends, and like, you know, and maybe it's like a walk down Wall Street or walk down in the mall, you know, and go through and see which stores are really, you know,
Boots on the ground.
Yeah, exactly. Boots on the ground. Which ones are in and which ones are not. I still like that Abercrombie chart, the ANF. That's kind of I would say that's my favorite in the space. Have I been to an Abercrombie and Fitch? No, I haven't. So that's why, like, I've got, you know, I don't have a lot of conviction. That would be the smart thing to do, is like do a little bit of, you know, your own personal research. But I mean, you know, it's very much a difference of you know, what's in and what's out in the fashion world.
Continuing with the earnings parade here. Do you want to go to PVH or just finish off the retail stocks from last night?
Let's stick tis the season to be jolly. PVH, Dennis wears a lot of those shirts. Well,
yes, always.
Yeah, down 8 sticks, and that, oh boy, they beat 303 versus 259. Sales, slight beat too. A full year guidance, 1155 to 1170. But that Q4, they don't like that Q4 adjusted guidance, 305 to 320 versus 371. Don't know much about operating margins here. Once again, Street leaning the wrong way into the report here, where we traded the 105 area. Interesting area, Dennis. What's your comments?
Well, I always traded the three together: PVH, Ralph Lauren, and VF Corp. They all kind of have moved together over time, and even if you're looking at the charts, they're not completely dissimilar. Although Ralph Lauren is separating itself in the last year as maybe best of breed there, as RL makes new all-time highs. There always is one. I mean, we keep talking about, you know, these three stocks in the same industry or similar companies. They'll have one on the outs. One is a superstar, and then one is just, you know, doing its thing. You know, obviously, you know, we talk O'Reilly and Advance Auto Parts. The difference there has been, you know, drastic, where AAP just cannot find its way. And O'Reilly continues to make new all-time highs, it seems like, every single day. So you've got, you know, the momentum, or you don't. Some of these stocks have some momentum here. VF Corp has just been an epic disaster. It's probably the AAP of the group, but it's been coming back as of late, you know. But it, you know, does a report like this with PVH not doing as well, does that knock VF Corp down today? Maybe a bit.
Boy, oh boy, oh boy. All right, let's.
Sometimes the charts are just tough. If they're tough,
Dennis,
you can always take a pass.
All right, Dennis, this one doesn't make you happy, but I know your cost basis is just so much lower.
It's starting to approach it. My cost basis is 130. But I mean, it was 230. We're trying to go to AVAV AeroVironment. Not a great report. Not great commentary here. Stock, again, you know, from a technical basis, you get the sell-off. Then you get consolidation near the lows. So the opposite of what maybe Christian was talking about. Now you have the earnings report and the stock move resolves to its downside. I mean, I am so impressed just the technology this company has. I do think it's a buy at a certain point in time, but I don't like to play catch the falling knife. I still have a large position in my long-term portfolio. I will add to it at a certain point in time, but I don't like to I like to buy them again, add to them when they stop going down. So, you got the initial whoosh. Sometimes you can get some comebacks, like an Amgen. I was picking the bottom that day, but I felt like, the news on that case was just misinterpreted. In this case, the report, it's had some hours. Obviously, it's down 12%. It's disappointing. But I still think this company is a good company.
Yeah, you would think they're reporting like UFOs and drones in New Jersey. I'm not really sure what the story is with that, but it's that I would think is drones. And you would think, this is a pretty hot space right now. It's a little bit of a head scratcher because this is the last couple reports for AVAV have not been on.
Not great.
Yeah, have not been great. So yeah, I don't know. Maybe this is the second or third strike for this company, but. Yeah, long-term view I think is appropriate, as you mentioned.
And valuation is high here. Like this is a storied stock. Obviously, there's hopes, there's some government contracts coming here that they can continue to grow revenue, and I think they will. But, this stock is out of favor here right now. And when stocks are out of favor, you see gap downs like this. Stock has been out of favor. How do you know a stock is out of favor? Price is moving down. We're at $230 and consolidating at $195 for the last month. Consolidation near the lows often resolves to the downside. So I'm not shocked at the move. I'm not shocked at the reaction here. I probably would wait until its stock stabilizes and starts to show some life here before jumping in for more shares.
Well, you guys know I like multiple lows in the same area, conferring with the pre-market trading, and you had a trio of lows at the 171 area. And I'll give you a little bit of a zone. Down to 168.39. So, 4 lows right around this 170 area. Once again, nice windfall for the shorts. You're holding 190 here. This is probably above the expected move. So not selling it down $25 and not necessarily sticking out at a long, but I'd be nibbling here. I'd see if someone would hit me, if I was short on a 170 bid down to 169. Right now, you're just kind of stabilizing here. 171.88 stands as the pre-market low for AVAV. But they're all bad reports here. The market's doing okay. Let's flip over to Sentinel One here. And Sentinel One, boom, boom, boom. We're traded down $3 here. That was earnings, correct?
Yeah, down $4. And again, the have and have-nots of cybersecurity. So we know Palo Alto Networks, CrowdStrike. Obviously CrowdStrike was best of breed for a long time before they had their mishap, but they've come back nicely here. Zscaler is another one that's been trying to come back here. Sentinel One, it's the old, isn't the old FireEye? Isn't this the old FireEye?
Yeah.
Am I correct?
Yep.
Yeah, so it's just been the laggard of the group. $75 in 2021 when maybe it just got overdone. It's down here at 28, now 24 with the sell-off here. Is there an opportunity here? I know Christian Fromhertz going to look at this and say, this does not fit my parameters for stocks in clear uptrends and stocks looking like they're going to break out. It might have looked actually okay ahead of the earnings, but at this point in time, probably doesn't fit your parameters.
It doesn't. Yeah, so I just move on when you have a miss like this. My view, when a company has a quarter like this, and again, it's important to watch today and like what it does and so forth. But my view is when a company has a fall like this, it kind of becomes dead money for the next quarter until they report their next earnings, or unless that they report some type of new feature or new product, something like that. Like the semis can do it. Like, if a semi company, for example, comes out with a new chip or something like that, then it changes the whole thing. But for the most part, and I use maybe a 75% chance that the name just becomes dead money over the next quarter until they come out and say that they're growing earnings again. So I think so. And there's so many companies too that I would rather concentrate on that are moving, up and to the right. VRNT is an interesting one too. I know this is a small cap name, but I just thought that this is interesting because it's making a nice move. It's got some security exposure, but in any event, because I think that's one of your best performers this morning, VRNT.
Yeah, the stock reported earnings of 39 cents, which were up, and obviously 290 is where they see fiscal year. So you got a value play here. You're going to make $2.90. Stock's trading $30, 10 times earnings. So, I mean, this is one of those value plays. One of those value plays has been left for dead, but we know this market, some of the value stocks are starting to show some life here. So maybe a turnaround story here. Obviously, they're really liking the report this morning, gapping up through the previous gap there in Joel in September here. Technicals are a little bit tricky on this one.
Gap into a gap. They got real excited when they took this to 32.02. You backed off. Still, I'll just look at this $30. You're traded 90 cents above that. So as long as you hold a 30 bid, let's take out that pre-market high. Or if you want an intermediate point, the high from September 3rd was 31.47. Then you're looking at just above 32. So nice move for VRNT. I just wanted to Sentinel One. Not going to be a contrarian on this one, but for today, man, if this got down to the $23 area, you had kind of broke out from there in September, came back, acted as support in October, 4 lows in the same area. It's not quite in the 50% retracement area yet. That's closer to $22. But I think what the bulls need to do, and what I'd be, let's look right instead of left. If you can start establish a bid here, between 22, 23, maybe put a couple multiple lows in. That's a big gap here for Sentinel One, and not sure what the expected move was on that one, but nice move, Sentinel One. You know what? We didn't do a lot. We covered the Bitcoin stocks, and Dennis, I know you mentioned the MSTR, but what's hotter right now than Robinhood?
Unbelievable. I remember having a call with Luke Jacoby, obviously from Benzinga there, probably in the summer. And I was like, pitching him. I'm like, he's like, give me one stock that, you really, like or whatever. He asked me. And I'm like, Tesla. This was Tesla when it was 200. So, that one worked out. I'm like, what's your stock, Luke? He's like, you know what? Robinhood. And Robinhood was like $18 then. And Luke Jacoby, hot stock Luke's can get some pretty good picks here too. He's like, if I had to just pick one stock out of this market right now, I'd pick Robinhood. So we'll give a shout out to the good Luke Jacoby over there. Big. I mean, the move has been nothing short of incredible. Obviously driven by, one, Vlad doing everything right, but two, the price of Bitcoin. I mean, this is a Bitcoin play. You can throw the Bitcoin chart up there on top of Hood, and you'll see, the move. Obviously, lots of crypto trading going on Robinhood. So this is a Bitcoin play. But I mean, Vlad has just done everything right. From the overnight trading to, he's on the cutting edge. They're talking about, like betting markets here now on Robinhood, betting on events and stuff. I mean, they're all over everything. Like, let's be honest here. Vlad's just done a damn good job here in the last couple of years.
I think I remember losing money on $11 calls once.
Oh,
I don't remember when, and that had to be a long time ago. But yeah, well, Deutsche Bank, they're giving this a little target. I know they had the investor day. I know they're going after bigger accounts. Deutsche Bank maintains its buy, raises its target to 42. So there you go. You're hitting the target today. Key Bank maintains an overweight. They said not 42. Let's go to 47. That's what they're talking about here. Trading up 3 1/4. If you have targets in this area, then take them. Look, just for fun here. I mean, you did. Remember how crazy that thing it got when it got to $85? But what I like to do when you see historical moves like this is I like to say, well, that all-time high. And remember all these banks that were downgrading it at like $8, $7 with like $5 price targets? I wish I could go back and look at that.
We talked about it back then too, though, on this show, saying at a certain point in time, the value is they have just so many accounts. I mean, when it was $6, $7, $8, the value at a certain point in time, like we kept saying, this is going to be a takeover target if it continues to go down because there's just so many accounts there. Obviously, the company, has turned it around, and now, you don't even think about a takeover because the company's just doing everything right on their own. But I mean, at $5, $6, $7, this was probably one of the biggest no-brainers. Hindsight capital is 2020, obviously, but I can remember, doing the show with you multiple times in 22 and 23 and saying, look, at a certain point in time, they just have so many accounts. valuation, don't even worry about it at this point in time, because with all those accounts, there's some value there.
And there was also that spree when Morgan Stanley bought E-Trade, right? And Schwab bought Thinkorswim. I mean, I'm going a ways back here, but there was are we moving off the jobless claims number here, Christian? Why don't you fill us in?
Yeah, we just had initial jobless initial jobless claims that came in at 224. They were looking, the estimate was 215. I'm not sure if this is going to move the market that much. I see the dollar moving down a little bit and bonds going up because that's a little bit higher claims than used to. For a while, we saw the number come in right on the screws, so that's a little bit of a move higher. Don't forget, tomorrow we got the monthly jobs report that comes out at 8:30 tomorrow.
Big move.
We also have University of Michigan numbers for tomorrow. But I just wanted to mention one more thing too, which I thought was interesting with Hood. And I like when you've got several catalysts that go on with the name. So, they had their investor day yesterday, or their event day yesterday.
Yeah.
So, they talked about the possibility of getting into sports events too. So you saw like a dip in DraftKings, and Flutter is the other name in that. But so you've got that going, so you have their event day going on, and then of course you have the move in Bitcoin. So it's kind of like a couple things. And I think also Coinbase, I don't know if anybody has any thoughts on the possibility of Coin being included into the S&P on Friday, but you still have, you got two things, you got the possibility of, one of two things happening, or I should say a couple different catalysts, because, that name goes up obviously with crypto, and that's actually just beginning to kind of break out. Coinbase, I shouldn't say beginning to break out, but it's had a nice move, but it's getting above like this recent high of 336. And then there is, I don't know if it's as high as a probability as a couple other of the tech names that might go into the S&P, but maybe that's like a dark horse that Coinbase could get added.
I mean, there's a number of stocks. App Lovin is a possibility here. Again, this is probably going to get announced at 5:15 p.m. on Friday. That's when they come out. Workday has been rumored for the better part of 2 years. Is it Workday's time eventually? Like every time Workday starts to show some life and you think, oh, it's going to go in, then it doesn't go in and they sell the stock off 10 points because it doesn't go in again. So that's one thing to consider, is that when you trade these, and I've traded these inclusions for a lot of years, when you have high expectations of one going in, you can get long. And if it goes in, it definitely pops. If it doesn't go in, it sells off. So, I mean, there are binary events. You can say, oh, well, why would I just buy that? Because if it goes in, I'm going to make a lot of money. Because if it doesn't go in, you're going to lose a lot of money. So Workday, I've seen it again and again sell off. So Workday, AppLovin, Coinbase, all possibilities here. There could be some other names as well. Chad, if you've got some other ones, let us know here. I think those are three, potential candidates here to go in.
I won't do my Workday joke because you just chastised me so bad last time.
Yeah, we're done with the Workday joke. It's too old now.
Christian, any final comments on these stocks? And I want to bring our esteemed guest in, Jim Tassoni here. So
one quick final comment is that's a great point that Dennis just made. Is like these stocks, if it is a possible candidate, it will sell off if it doesn't get included. So make sure, like if you're playing that game, there's a couple of things that you could do. Number one is you could pick a name that you like anyway, so that if it does sell off, you might actually be you might actually want to actually buy it further on that dip. Two other names that I would be looking at too is Apollo, APO, and our guest yesterday mentioned the Trade Desk as a possibility too. CPD. And then just one quick final thing is the other thing, if you want to take a shot, that's what options are for. You can take it, with a binary event, as Dennis mentioned, that's exactly the case for some of these things. But know what your risk is going in and say, okay, I'm willing to risk like $200 or whatever. And you could take a shot via the options. Of course, if it doesn't work out, you'll lose the $200 or whatever you decide to risk.
Right,
also, one more, Pinterest, some people are talking about as well, PINS. I don't think that's a likely one, but there is people chatter, and I don't think it's coincidence that you start seeing some of these stocks run up. It's like an event, and we love trading, catalyst-driven events, and you're seeing a little run up in the last couple of days in Pinterest as well. I mean, the Trade Desk too, running up. I don't think it's a coincidence. Obviously, we're in a bull market, stocks are going up, and a rising tide lifts all ships. But there's definitely some outperformance in some of these names here as of late. I mean, Workday's popping. That was popping off CRM yesterday, but it was popping, a couple days earlier here too. So just keep that in mind. There's a number of potential candidates here.
Okay, we're going to go to our guest. All right, we got Jim Tassoni on from Armor Wealth Strategies joining us here on Pre-Market Prep. James, how you doing today?
Oh, I'm not too bad. How are you guys?
We're doing good. We're doing good. So, a couple things I want to address with you.
First thing I want to address the shirt before we even get into the interview. Gritty. I love that shirt. Look, it's a stock chart, and it goes up, and the boom forms gritty. That is just a fun shirt.
Well, this is what I figured with this shirt, right? It combines my two favorite things, charts and Detroit sports teams. And essentially, what the chart shows, looking this way across, is the probability of the Tigers making the playoffs throughout the season. And you can see all the way down to the lows here, and then just the spike towards the end of the season when they finally made it in. So we love that.
I did not even realize that. That is fantastic.
I did not. That is a good one. Okay, Jim. So we're going to start out with a little pain for you. Walk us through your short NVIDIA going into the report, and you had your stop. I saw exactly what it did, and I'm like, oh, man. They got you.
Yeah, so Joel likes to just, kind of needle the wounds, right? So we can either show it on your chart, Joel, or I can pull up mine, whatever you want.
Go ahead. Bring yours up if you want.
Okay. All right. So oops.
All right.
And it is not. Let's see if it shares now. Select.
Yep. Tire screen, and then the one with the chart on it, and then I can bring it up once I see it.
This is always my problem here.
Yeah. Yep. That's all right. We can work on it.
It is not sharing.
Okay. All right. All right. Let me bring mine up then here, and we'll go to the NVIDIA. We will go to the 24-hour session. Let me go to like a 60-minute here, or even let me go to a little bit more of customization.
Yeah, it's telling me the browser's blocking my screen. Not sure why, but
okay.
Anyway.
All right. There it is, Jim.
I just wanted to go real quick. Intel appoints interim microchip CEO, former ASML CEO to the board. Just to the board, it looks like. Not CEO, just to the board.
Okay. All right, Jim. I actually have the 360-minute full session chart up there.
Yeah. But to your point, Joel, both of us, you know exactly what happened to me. I was, with any trade you're making, you need to know where you're going to get out before you get in. It's the key to staying alive in this business. And so I got short ahead of the earnings at about 144.60. So we saw that dip off the earnings. I had my finger on the trigger at about 138 to exit. I thought we might see a little bit more downside. Again, what am I thinking? And this goes to Christian's ideas and what Dennis talked about earlier. Why do I continue to bang my head against the wall and try to short stocks in rip-roaring uptrends? The contrarian in me always gets smacked in the face. And so I went in, I took the short, I got stopped out at that, roughly a little over 150 level that I mentioned, only to see us whoosh back down, basically almost top ticked the trade. So not a great trade for me. We all have them. It is what it is. Luckily, I'm still long NVIDIA in my long-term account. I've continued to ride this uptrend, but that trade just did not work out.
Okay, so I went with the bad. but I'm going to change over here, and I'm not sure that this is the one, but I can remember talking to you a while ago,
Yeah.
and you said that you were looking at crypto, and was it Solano? But there was one crypto stock that you said, I think you were doing something for your kids,
Yeah, it
and
was
you were putting.
It was Cardano, actually.
Oh, okay, okay.
It was
Is
not.
that responded like the other ones or not?
I mean, it's not quite as, you know, it's been a decent, it's definitely, it's kind of, I bought it at about, at that point it was about 50 cents, and I'm careful to talk about some of these kind of,
Okay, okay, okay. Well, we'll just
again,
talk crypto.
yeah, we've had a nice double off the lows, but it's been one of those where, you know, I got into it, it doubled, it halved, it doubled again. So, you know, we're on the green side of that trade, but it's definitely one of those put in your top drawer and hope that the technology works out. I think it's a great long-term play, but not something that that I'm actively trading.
What about Bitcoin? What are you thinking about Bitcoin at
Yeah,
104,000?
so I mean, again, Bitcoin is another one of these where you know, you've had to be long. I wish I've owned some Bitcoin since I got into it originally a long time ago. I wish I had held it. I got into it at about 8,000, exited it at 15 or 16 and thought I was a genius. I've been holding the current position that I'm in from just about 65,000. So again, a decent trade here from a shorter term standpoint. I think we all kind of had that $100,000 barrier. It was bumping its head up against it, but I think we all knew that it wanted to get through there. At this point, I don't know, longer term, I think you still want to own this. You know, for our clients and for myself purpose, specifically, you know, a 1 to 3% allocation of your total portfolio, holding that thing for the long term. I almost think it's a no-brainer. Shorter term, though, from a trading standpoint, I mean, again, and I always do this wrong, and I'll be the first one to admit it, but I have a real hard time initiating a significant position at this point.
There's I've also been watching too. I don't know if you have your eye on Ethereum. You mentioned a couple other cryptos, but I've been watching ETH now. Of course, like Bitcoin's getting all the headlines today and last night, but the chart's it's starting to kind of catch some momentum. It's been a little bit of a laggard, but I've been looking at Ethereum, the ETH, a little bit more. Do you have an opinion on Ethereum?
Yeah, I mean, on the futures, this is actually a trade that we've done fairly well here, and I've done in my longer term portfolio. I've owned Ethereum futures. I bought it for the first time about a month ago on November 7th on a breakout above kind of this like 2703 area. And we just exploded to the upside from there. This is another one now, at least the way I look at it, you know, we cleared another hurdle in my charts, a short-term hurdle above this 3816 level, and now trading close to 4,000 here. This is one that I'm not as confident on long term, but I will be the first to admit I don't study it as closely as I do Bitcoin. The chart looks great. Obviously, we've broken out and roared higher over the last month or so. I think you could probably plug your nose and buy it. My stop here is you got to be willing to give this thing 10-15% just because of the types of volatility you have in this thing. If you want to get long here, you can put a stop in below, in my opinion, 35.95 area. If we can't hold that, we're going to, I think that's a position where you want to exit. You also could wait. See, you know, I've got an area now. Support becomes resistance. 38.1650 is a spot that I might look to initiate a position if you don't want to buy up here with us kind of floating into the ether. No pun intended.
There you go. Very nice. Thanks.
Pun was kind of intended.
You're right. You're right.
All right, Jim. Let's just move back into the mega cap tech trade. You know, Nvidia didn't work out for you here on the trade aspect of it, but I mean, we're starting to see consolidation, you know, near the highs on a lot of these names. Apple breaking out to new highs. Microsoft is knocking on the door of new highs here.
Really?
Yeah, they're like slowly coming back. Google's been a laggard, but it's trying to come back here. Meta just forever seems like whenever it's down, it eventually comes back to new highs here. We've been talking about the broadening out, but in the last few days, the market's going back to the well. It's going back to the mega cap tech leaders here. Is this continue into the end of the year, or do we continue to or is this just, you know, a little pop and eventually these things are going to come back in? What are your thoughts here on mega cap trade?
You know, again, it's one of those situations where you can get yourself in trouble trying to fight this trend. And so for me, from a trading standpoint, I'm just continuing to stay long these names on the breakouts. You know, the Qs in general, if we want to look at even a broader, you know, a broader basket like the Qs, I mean, this has been a trade where, you know, every time we hit any kind of resistance, we bounce around, we consolidate for 5, 7, 10 days, and then we break to a new high and we just keep moving higher. I mean, we saw it again here. I had resistance on the Qs at this roughly 506.60 level, 506.63 to be exact. And we just continued for, you know, roughly 10, 15 days to just kind of bounce along there, close a little higher, dip back below it. And then, you know, here we go again, end of last week, break out above that level, close above it, and we're off to the races again. So these are really hard trades to not be involved in, especially me as a professional where I'm expected to outperform markets and beat benchmarks. If you don't own these particular Mag 7 stocks in at least some shape or form, I think you're having a real hard time outperforming these days.
Well, that's just it. And I was looking at some stats, and I looked at these long-term stats. I don't know. You can find anything you want on Google, and obviously, you know, if you search. But something like over the last 30 years, 88% of money managers have underperformed the indices. 88%. And I mean, the indices have basically been rebuilt to own these 7 stocks. I mean, we know the S&P, Joel, when we used to cover it, it was like, you know, think about like 10 years ago, the S&P top 10 components made up, what, 20% of it? Now what's that top 10 components make up? 35%, 30% of it?
It's I actually could do a different
What's
screen.
interesting too is they kind of just lulled us to sleep there for a little bit too. Like they weren't doing much, you know, the larger names, and I got a bit negative too. I was like, I'm bored with these names and so forth. But you know, they just kind of they're in the consolidation stage, and you know, they had a nice move up since the beginning of this week, since the beginning of the month. They've done really well. One other point to make too is like if you don't have a big preference, some people do, obviously we're stock pickers and so on and so forth, but you could just you know, Joel had a chart of the Qs. Like you don't have to be picky. You know, if these things, they're all kind of making a move and they all kind of seem to move together a little bit, you know, there's nothing wrong with just saying, hey, I'm not going to actively manage this one as much as some of the other high flyers, and I'm just going to go along the Qs.
And you know
keep it simple.
Yeah, and you know what's so funny to that point, Christian, is especially, I mean, it's kind of always been designed this way, but especially in the last few years, Dennis, to your point, I mean, whether you're talking SPY, you're talking Qs, I mean, these are essentially actively managed momentum funds, because as these stocks outperform, they become larger and larger parts of these indexes. So inherently, the momentum is being driven to the stocks that are outperforming, and we're just adding more and more to those positions. So if you look at this, you know, I know they're considered passive index funds, but in reality, they really are active momentum funds to a point.
All right, Jim, before we let you go, what are you avoiding? Like, what if someone came up to you and said, Jim Tassoni, I'm going all in, or I'm putting a big investment in something, and they said, you'd be like, what would that be?
Yeah, I mean, I think it's really hard to avoid wide swaths of the market right now because of the overall strength of this stock market. It's been very difficult to find, broad-based ETFs or broad-based sectors that you want to avoid unless you're doing something, which is more Dennis's expertise, like a pair type trade where you're trading against some stronger sector. But from an individual stock standpoint, I mean, two stocks, and I've talked about one stock that I haven't liked for a while, and it's sort of just been meandering. But I think one area that you could play is look at some of these like a Ventas in the real estate space. I think they're reliant on their senior housing. They're more tied to the healthcare area. I think, and I don't want to get into that horrible situation that happened yesterday with United Healthcare, but and their CEO. But I think you can kind of see there's a rhetoric both in the incoming administration and the public at large towards healthcare and towards healthcare regulation, insurance companies, things like Ventas. I think the Trump administration, being populist as it is, this could be an area that comes into its crosshairs. So I think you need to be really cognizant of the idea that if the momentum starts to break down here, combined with the regulatory climate, that I think there's a lot of hatred towards these type of stocks. There could be regulatory things coming down the pipe. That would be an area where if somebody said, I want to go all in on insurers or all in on senior housing or anything tied to Medicare, Medicaid, subsidies, things like that, that's an area that I'm really looking at from a short standpoint.
We've been on the line with Jim Tassoni, CIA, Armor Wealth Strategies. Enjoy yourself next week there with the kids down there at Disney World. So we'll be tuning you in a couple weeks, and I hope to see you soon. That's Jim Tassoni here on Pre-Market Prep.
Thanks, guys.
All right, we have another guest coming up at 9:00. Dennis, do you want to put a little tease, or do we want to do a few more?
Yeah, well, we can just say, so we're gonna bring him on in here in about 4 minutes, 5 minutes. Rob Wiesenthal here, CEO of Blade Urban Air Mobility, is going to be joining us here to talk about his business. So I know this stock, BLDE, I've traded every once in a while here. It's starting to perk up, though. Like BLDE, do a quick technical on it here, Joel, ahead of the interview here, because this is a stock that's starting to show some life. And this broadening out here that we've been talking about here, you're starting to see, broadening out into some smaller names as well, starting to show some life as the stock is approaching, new 52-week highs.
Yeah, big move. I'm just looking at, after a big move, what do you look for? You look for consolidation. And right now we're in that consolidation phase here, digesting that big move that it had last week. So we have a few more minutes before that interview. We have some earnings after the close that we could preview. And interesting stock, and we don't have our deep dive dumpster diver on today, Aaron, but he was talking about Lulu for a long time.
Yeah, we all did. We all talked about Lulu there for a while, and it's been the comeback story here. $240 back in September. We have $340 here now. It is going to report earnings here after the bell. Bar is a lot higher than it was before because obviously the stock's run 100 points in the last 3 months. So it's been a good move here. With that being said, I mean, Lululemon, at one point in time was just the untouchable breed, always traded, at really high valuations. The valuation got a lot more reasonable when the stock got down under $250, showing some life. Mr. Christian Fromhertz, what are your thoughts on LULU?
Yeah, and I think the results for Gap that reported about a week ago too have also helped, just kind of showing that I think they were talking about that their holiday sales are starting to they were starting to see some strong pickup in sales, and of course they have that Athleta brand too, so they're kind of they've got some overlap between the two of them.
Okay. Also, did Warren he just scalped that Alta. Was it Alta that he scalped out of, or was it another beauty stock?
No, it was Alta. Well, all of a sudden, Warren Buffett's a day trader. Obviously, took a large position and then sold out almost all of it there. The stocks turned around. It got the Warren dump after we found out that he sold the majority of the position, and then in the last 7 trading days, this went from 340 to 400. I mean, this is this market. It's like violent little turnarounds here. You get the sell off and you think, okay, yeah, this is it. And nope, they just turn them around on a dime. I mean, even Unity, talking back to that, where I got shaken out of this. I was in it from 17, sold some stock ahead of the report at 22, which is an excellent sale. But then when it cut under 20, I'm like, okay, I don't want to own this thing under 20. So I cut out of the position. It actually went down to 17. And then in 3 days, bang, 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 it's 24. Now it's 26 and moving higher here. The turnarounds, are sometimes violent. So big moves.
I'm looking at the Alta here, and boy, oh boy, look at this. You had the double top at the 333 area. I mean, if this is not textbook, gap trading, look at that double top 333. Then you get the Warren buy, and then you get the shake and bake, the new high. Warren decides to dump over here, and you come down to 331.74. You fill that gap by $1. Could you take $2 worth of heat, Dennis, on a $310 stock or $330 stock? Holy mackerel! But we'll see. Big run up into the report. I would just say if you're trading this after close, don't know what the expected move is here. But going back to September and July, you did have some highs in the 412, 413 area. So those are a couple earnings after the close. Also, HPE is due to report, and man, wow, you got to be a little cautious this, maybe, huh? With the Dow report, or just go with the trend.
Well, HPE is moving up here, and I'm not sure if there's news that we missed here today because this is up 3%. So this is a big move for HPE. Oh, yeah, it's Morgan Stanley upgrading the stock to overweight. There's a bold call. Upgrading the stock ahead of the report. You just see analysts do that. Usually they like the information, obviously, from the report to make their call. But here's a bold call from Morgan Stanley analyst. It's Meta Marshall upgrading HPE to overweight from equal weight, raising the price target to 28 from 23. Just reading from the note, with close of the pending Juniper acquisition seeming near, we think upwards of 40 to 50% of the pro forma earnings power being driven by networking can help shares re-rate to a more blended hardware network multiple of 12 times. I mean, we've talked about HPE being a cheap stock. We've also talked about it, being an AI play here. And, slow and steady, this one's been coming back here. I did buy some more Dell yesterday. I got back in, not some more. I got back into Dell, half-size position. When I take half-size positions, I'm not as convicted as I could be. That's in a long-term account. But this HP, we talked about this back when it was 17, 18. I never struck. And sometimes just on these AI story names that, when you get the dip and the inevitable dips that come, you got to strike. And sometimes, it's hard to do when the stock's going straight down. But they turn around on a dime. September, the low was 16. Back here at new highs of the move, 22.5.
With the Dell here, which is interesting, and this is a triple D technical formation. You didn't strike on the first day here, but now you have a point. You had to wash out low on the day of the report, and now people are scratching their head. They're like, well, yeah, it was a bad quarter, but overall it's been in an uptrend. You got a nice gap to fill above, and if you're a shorter term trader here, you have a potential out here at the low of the move, 121.30. I was looking a little bit lower at the 50% retracement. That was closer to $18. But we got our special guest ready in the background here to join us here on Pre-Market Prep. So with no further ado, let's bring him on.
Special guest, Rob Wiesenthal, CEO, founder of Blade Urban Air Mobility. Rob, how are you doing today?
How are you doing, Dennis? Nice to see you.
Yeah, nice to have you on. It's exciting, obviously. You've got a really cool story here with Blade Mobility. Tell us a little bit about the company.
Sure. I started Blade about 10 years ago. We went public in about 2021. Today, we have two key businesses, but the business we built it on was being the largest urban air mobility platform in the world in terms of moving passengers by vertical transportation. So specifically today, helicopters. Tomorrow, what you call eVTOL, we call EVA. So we operate in the United States and in Europe. In the ecosystem we've created, it's basically technology, infrastructure, which are terminals, routes, customers, and a terrific brand. And right now, we fly more people by helicopter in terms of for travel than any other company in the markets we serve. And so when you were in Southern Europe and we're in the United States, mostly in the Northeast here, and the company has grown, incredibly well on that side. But also along the way, we started doing organ movements. Today we're now the largest transporter by air of human organs for transplant in the United States. That is now a bigger business than the business that we've known for. Last 12 months, about 150 million of revenues. We've grown that from 15 in just 3 years, so 15 to about 150. And for the first time, our passenger business has been profitable in the last 12 months. We originally put out guidance a while back, about a year ago, that we would be profitable on an adjusted EBITDA business for the passenger business in 2025. We did that about a year early. And what's exciting about this business on both sides is really the opportunity for growth. Starting with the passenger, the platform we have is completely asset light. So all of the aircraft that we use are under a long-term contract with us. We do not own them. So what we've done is basically prepared for the shift to electric. You probably have spoken about Joby and Archer and other companies. So at that point, right now, they're manufacturing, but there's nobody that has this platform where people are booking flights. They're going to terminals. There's coordination, there's logistics, there's a safety team. There's all the aspects of this, literally technology stack goes from consumers inside the cockpit with the pilot of making sure we can fly as many people as we can and manage hundreds of flights a day. So many people view that as an index play on eVTOL. If you don't know who's going to win, if we are a company that at some point, when these are certified, and that right now is looking like Middle East late 25 and potentially US late 26, we will be using one of these one or more of these different types of eVTOL in order to move our passengers, swiftly. And the big unlock here, where the growth is going to come from, is actually from unlocking new landing zones, and that happens with quiet. The only impediment we have to growing fast in passenger is there are not enough places to land. So for New York City, for instance, where I'm speaking for you now, we have a Blade terminal on the east side, all the way to the west side. Midtown is a dead zone. And any pair of landing zones is a new business. And that's what we have in Southern Europe, and that's what we have here. But what's stopping it is noise. So once these aircraft are commercialized, it's not so much that they're electric. It's not so much that they're emission free. Because they're quiet, all the stakeholders, regulatory, community boards, they will want that. They will want a place where you can actually enjoy vertical transportation near them. Because Dennis, if I can actually, if you can go across the street to hop in a Blade to the airport, that's much more attractive to you than going to, getting in an Uber and going to a Blade terminal today. So that's a big opportunity to growth. And then on the medical side, there's $1 billion addressable market for us. We move heart liver along by jet, helicopter, and ground. We just started moving kidneys, what we call above the wing, on commercial flights. So those commercial flights actually are able to use designations so they can bypass a lot of traffic, even though when they have passengers, on board. And we're also doing ground transport. Made a recent acquisition in that business. We're moving blood samples and tissue samples. More importantly than even that, as the organ market grows, which is growing, pretty swiftly, the distance you can travel move an organ has moved a lot. A couple of years ago, an organ only could live out of the body for about 3 hours. We've now done trips between Alaska and Boston with perfusion devices. There are a lot of companies out there now that are making devices that allow organs to live out of the body longer. And with that, we have longer flights, more revenues, more growth. So that's a bit kind of a thumbnail of where we are today.
Ron, how many cities are you operating in now? How many do you hope to expand to, let's say, in the next 5 years? And what criteria do you use?
Well, I think that's going back on the passenger side. This unlock is going to be about electric. And that's why we're frankly excited about the medical business, because we're enjoying incredible growth. As I said, we've gone in 3 years from 15 million to about 150 million. On the passenger side, we're about 100 million of revenues, profitable now. But we're the growth is coming from penetration. So New York City, let's say we have 3 places you can land in kind of Manhattan. 28 million people go between the airport and New York City every year by private transportation. So no subways, no super buses. We're just talking about Ubers, Lyfts, yellow cabs, rental cars, and your own car, right? There are not going to be any new heliports. There will be no new heliports until we have this unlocked with what we call EVA or eVTOL, because they're quiet. So right now, we're in New York City. We're in 6 locations out in Long Island for a leisure route, which is the Hamptons. We're in Southern Europe, where we're in Nice, Monaco, Cannes, Saint-Tropez, Courchevel, Geneva. And in fact, we're so kind of embedded that in Nice Airport, which is probably the most important airport in Southern Europe, we have 2 BLDE lounges, one in Terminal 1, one in Terminal 2. We also have the exclusive license to fly people between 2 countries, Monaco and France. And we do that every day for, again, price of the Uber Black, about $200 between Monaco and Nice Airport. And in New York City, the price is also competitive with an Uber Black. When you say, what's our competition? Our competition is ground. We're one of one. There's nobody that does what BLDE does on a by the seat basis in the markets that we serve.
Talk about the earnings, because obviously when you have startups, it sometimes takes a long time to get to profitability here. And you've done it in just over 3 years. Do you see that continuing? Like, do you see, obviously you're seeing revenue growth, you're talking about medical, do you see the earnings continuing to grow here as well? Like, can you stay profitable?
Yeah, I obviously can't talk about, we only talk about guidance on our earnings calls, but this inflection point in passenger was a big one. And the fact that the company is profitable, is very profitable on the medical side and finally turned profitable on the passenger side. I think the way we look at it is the growth today is for medical. However, in the next couple of years, the passenger side, what I'm hoping for is really significant growth once we have these new aircraft. And all it is for us is an asset swap. All right. We got the business. We have hundreds of thousands of flyers. Right. And so at this point, that entire stack, from the technology to the terminals, logistics, the customers, the routes, the brand, we slot in these aircraft, we use them. And then within hopefully a couple of years after they're commercialized, which we're saying late 26, you're going to see new landing zones. And frankly, that is, what that opportunity is, because the more places we can land, the bigger the business is. Los Angeles should be the greatest helicopter market or vertical transportation market in the world. There's no place to land. There's more traffic than everywhere. We have, operations where we can right now. We also have a joint venture in India. And I think that, the growth going forward on medical is going to be, we're number 1 in the US in terms of air transport. You have perfusion devices, you have new technology, you even have therapeutics that allow patients to be able to accept organs that previously wouldn't. So you're going to have that kind of, over the next couple of years, you're going to see significant growth on the medical side, and we're going to have prudent, profitable growth on the passenger side until eVTOL is here. And right now, our balance sheet with about 140 million of cash, we have no debt. That cash has been earmarked for tuck-in medical acquisitions and also some owned aircraft. We only own aircraft on the medical side, and about 10% of our overall flying is on owned aircraft. Again, only in the medical, they're jets. And every time we add an aircraft, it's an incremental 30% ROI to our margins. And that is, pretty good. So keeping that balance of asset light and asset heavy is really important to us.
Okay, kind of a 2-part question here. We also have a question coming from the chat. Now for like medical transportation and transportation of organs, timing. is so critical, right? When you get so how many aircraft do you have? What can I just pick up the phone right now and have some? I mean, obviously I don't think you cover the Detroit area, but how do you manage the logistics and the scheduling? Because with transplants, something happens somewhere, it has to be somewhere quickly. How do you handle that? And then also a question from the chat is, in theory, how many landings could you do per site per day?
Got it. So let's talk about the medical question first. So we enter into long-term contracts with hospitals. We've got 70 to 80, and we're highly integrated in the user tech stack. They have everything from total transparency, chain of custody. They can see exactly what's happening. Then we even position aircraft near the hospital, and sometimes lights and sirens SUVs, to deal with the question you specifically asking. So when we have an aircraft on the ground, these pilots are on standby kind of 24. We have pilots that are on standby 24/7. So all they do is basically hit a button and the team goes into action for either heart, liver, or lung. There's very little repositioning for them. It isn't a situation of an aircraft having to come to get them necessarily if we have one within one of our hubs. And the same thing, for the ground. But also with these new technologies, perfusion devices that allow the organs to live out of the body longer. Time is always important, but we can go longer distances. And the growth of this business is not only the number of organs that are available for transplant, and the number of people who need them, but it's how far are you flying? The farther we fly, the more money we make, and also the more organs are available for someone who really needs it, and that's really exciting. In terms of your other question, it really depends on every heliport is different. I'm looking over at Hudson Yards. I can see Blade Lounge West over here. We got about 6 pads, and that's about 20. It's 24/7 heliport. We also have heliports that are not open on weekends. And again, going back to eVTOL or EVA, because it's quiet, you'll see more 24/7 vertiports. You'll see ones that are opening on weekends. You're going to see these vertiports closer to where that our passengers are. So in terms of what I think the question's kind of leaning towards, the current infrastructure we have will completely accommodate the business we have for helicopters. However, when EVA or VTOL is here to really scale it, we're going to need more of those landing zones. And I believe that the stakeholders, cities, states, federal government, and even community boards will want it because they are quiet. And that's been the big impediment. When you think about, if you want to be City 2.0, you want to be a global competitor in terms of being a city, you better have an urban air mobility strategy. And right now, transportation is this way. You got it underground in terms of subways, you have above ground with cars, you have the top layer, which is commercial. And what we're working on is that middle layer, which is urban air mobility. And that's really short distances in and out of cities. And that's something that you're going to see in the next couple of years for sure.
Just final question, just going and obviously talking about your vision and your plans here for the next, you say the next couple of years. What's your vision looking out for the next 3 to 5 years? Like, where is Blade going to be?
Sure. Well, obviously, answer that question in 2 parts. The medical side, I hope that, the 3 of us are not necessarily talking about medical, but we're talking about, one of the largest asset-light logistics platforms to move time-critical cargo, where the first vertical was medical. Because we, just like Joel, like you alluded to, we can move like that with transparency, with redundancy, getting things where people need them in a timely basis. So that means 24/7 manufacturing parts, aircraft on the ground where we may need parts of the last second, radioisotopes. There's so many things that need to be moved around in the physical world, so to speak, in a time-critical basis. That's what we've created here as an asset-like logistics company, where the first vertical is medical. So I hope to be talking to you about all those other verticals that we're working on now. On the passenger side, hopefully I'm back here, and the mix of aircraft we're using is majority eVTOL or EVA and not majority helicopters. I think you'll have a cohabitation phase because we're so big and we need the right aircraft for the mission. So the same way today, the same a helicopter that moves in Oregon or takes you to a leisure market, like say the Hamptons, is very different than one will take you to Boston. You need a portfolio. And in the beginning, you'll only need very specific types of eVTOL. So I hope to have kind of 3 to 5 years, we'll be moving towards hopefully 100% eVTOL as opposed to, just a small part. And at that point, when you have those in the market, people see they're quiet, there are more landing zones. As I said to you before, any pair of places you can land is its own business. We have a lot of those. We got a really big business to talk about.
We've been on the line with Rob Wiesenthal, founder, CEO, Blade Urban Air Mobility. Rob, thank you so much for taking the time to speak with us today. Looking, again, good luck, obviously, and looking ahead to having you again soon. Thanks, Rob.
Great. Thanks a lot, gentlemen.
Okay, Triple D, you fought through another pre-market prep show here and feeling well. You're going to take
Fighting a little bit of this flu bug still. I'm on like day 25, which it's got to be COVID or something like that. And maybe I need an organ transplant. Maybe I should talk to Rob a little bit more here because I don't know. It's been the weirdest illness where I got hit really hard on like day 1 and 2, and then I was feeling better. And then like a weekend, I was like, I kind of felt crappy again. And then I've been feeling better. And then last night, I'm like getting chills and everything again. I'm like 3 weeks into this. And I'm like, it's up and down. Could I just be getting multiple flu bugs? I mean, both my kids, school age, 7 and 10, they bring home, all the obviously diseases from school and everything. But I mean, it's been like, and Christian said the same thing when I was talking to him in the pre-market show. He's like, this was just a lingering thing. We're kind of went in waves and lasted a lot longer. Like I've had this nagging cough that just doesn't want to go away. But the chills and stuff, starting 3 weeks in, I'm like, enough. Enough is enough. I want to get healthy here.
All right. Well, you're going to be getting some much needed R&R. This is last time you'll be hearing Triple D here for until a week from Monday. He's going to, and we actually breaking news a week from Friday, a week from tomorrow, you're going to have no Triple D or no Joel. I don't know. I mean, I don't know. We got a Christian.
We got AP and we got Christian going to run this show here, though. So, yeah, next week I'm away. Joel's going to be here with you Monday and Tuesday, but going to miss you Wednesday, Thursday, Friday. But Christian Fromhertz is going to be here. And we got a great lineup of guests. So make sure you're still here. Maybe we could even, we'll see, if we can make a special guest appearance of ourselves throughout the
we are getting together,
here.
but it won't be during market hours. So
yeah,
but yeah, who knows? I can, maybe I can run things from my my laptop. All right, we're gonna sign out tomorrow. Tony Pollock, Real Life Trading, is gonna join us tomorrow. He made a nice call on NVIDIA at that 150 level last week, if you remember that. But man, great show, Dennis. Great lining up our guests, Rob Wiesenthal, Jim Tassoni. He ain't full of baloney. He brings us good content all the time. So this is it.
You made me laugh.
We'll signing out. We'll see you guys tomorrow morning. Everyone have a great day.